Got it. Okay. Good evening, guys. September 29, 2021, after a rough trading day that we had today with BNTX and AFRM. So the idea is, as you know, there are not comments. I mean, people are concerned and sometimes a little bit confused of the risk management approach. And I wanted to start this session to let know that there are two ways on doing it, and probably I was not clear at the very beginning, but this is important. We spent a lot of time and effort before the challenge started to set the rules, to even design the tables and a lot of stuff. So, and of course, every week we tune up and we try to adapt to the current situation of the markets. And that is the reason that we changed this week to 25, 50, 75% profit taking, because most of the stocks are not having continuation for the volatility, right? The volatility is, we have a high volatility right now, but it's not high volatility on a downtrend or an uptrend. It's been choppy with high volatility, which complicates a little bit more the situation. And can you just turn off or mute your mics, please, because we're having some external noise. So that is the reason that I moved the profits to 25, 50, 75, because we have to take profits very quickly and move the stops, because the trade that you saw could go the other way. So I think that the main, and I understand the main confusion here is that we already have set rules, and sometimes you hear me doing the opposite. And there are two ways of doing it. If you already know the rules, no matter what I say, you just follow the rules. You already know what are your target profit targets. You already know what your stops are. So just set them and forget them and continue hearing me. If you want to avoid, I mean, if you don't want to fall that part and you want to take my advice, or because I don't know what is going to happen as well as you, don't you think that if I'm staying is because I know that, I mean, I'm just trying to see how the internals are doing, what has been happening and everything. And if I decide to not take the stop or do something, is because I see something, but that might change. So what I suggest you to do, and I'm gonna try to be, and that's my trading style. I mean, I even though I preach a lot the risk management, sometimes I do exceptions and I move my stops a little bit, but I'm watching and I have some experience in technical analysis, right? So it's different. So, but just to avoid all these type of situations, I think that we just have to stick to the plan. But also you have to be very aware that if you take your first 25% and you get stopped after moving your stops to entry, and the game is over. And sometimes you want to continue trading and you continue, what else would you have? Where, okay. So let's be just very aware that we're just gonna follow the stops. We're gonna follow the rules. And if you don't have much more buying power, or even though you got stopped and you didn't did profit that day, that's it. I mean, we just have to wait for another day. So you just have to take in consideration that part. And I think that will be easier. Now we're just back again to a strange situation when we are down almost 50%, and some people are even lower because of the same reason. So what I would like you to to do. If you're not can tolerate this risk, just follow the rules. If you only have $2,000 in your whole account, and with that money you're expecting to pay rent in 3 days, or I mean, to be honest, to begin it, you shouldn't be doing the challenge. You should be working to get secure money to pay your debts, your near-term debts. I mean, to begin with. So if you are expecting that the challenge is gonna save you for your short-term bills, it's not gonna work, because your emotion is gonna be, I mean, the challenge and the market don't give a damn if your friend is doing 2 days, to be honest. So, and we're mixing a lot of situations. So my suggestion, with all due respect, if you only have $1,000 left, don't even be in the room. I mean, it's as simple as that. I mean, you cannot do, I mean, you have to be coherent in that regards as well, because you have another priorities right now that are distracting you for having a successful trading. So solve those issues first, and then you come back when you're ready. So that is to begin with, and it has to be very, very clear. Okay, forgetting about the speech right now, so let's review a little bit what happened today. And I'm going to share my screen here. And we're going to go with, and just confirm, please, that you can see my screen share here, which is the template. Just checking, you can see it, because there's no way that I can see here. This. Yes, okay. So what happened here is we took that trade expecting, I mean, everything was nice here on this candle. We took it too early, and it reversed and went south all the way. And the more wise thing to do or action to do is wouldn't be stopped when we should, and we didn't. And I thought that we would reverse. We didn't reverse. But there are two ways of you, for you that have the template, and I use a lot of this indicator here, and it can help you out a lot. This 50 line here, when it crosses down or up, that is an entry or exit point, always. So we're gonna be very careful with that one on the 10-minute. If you see here, it crossed the 0 here. And exactly at that point, usually when it crosses the 0 is when you have the cross on the EMAs. And from that exact point here, if we put a line time here, where is it? Timeline. If we just put it here and put it in, let's say, white. I'm gonna put it a little bit wider here. Exactly there is when everything started to go south, right? We got another one here. And it went a little bit, but not much. And the problem is when it crosses, and it crosses the 20, the 30 level here, all this side is that you're gonna have continuation on the downside when you're in this area, that you're gonna have a downtrend. When it's up here, you're gonna have an uptrend. When it's in between here and it doesn't cross, is that it's gonna be choppy, okay? Like for example here. So that is a tool that you already have that I haven't explained you how I use it. So now you know it. It's a nice way to. The problem with this indicator and all indicators is that you're gonna see it cross and then you're gonna hesitate. Okay, let me see if it reverses. I mean, that's if your stop is near and it crosses, and it helps more that not to wait for the stop to hit. If you see that that line crosses, it's a good sign that we should exit even way before the stop hits. So we're gonna start using a little bit more that indicator on the 10 minutes, okay? Same for entries. I got here, that's what I got here because it crossed up, and that's what I stay here. Unfortunately, I didn't get out here, and I didn't advise that. So that was the reason. And why was the main problem here? That again, I didn't wait for the 2-3 candles, right? And we took the open. I got a fake. I thought that to be honest, I thought that we wouldn't be covering this extension that we had at the. I knew that if we hit here, we're gonna retrace, but my expectation was okay, just take it quick and get out here of everything. And unfortunately, didn't happen. So that is the technical part of why I decided to take that trade. Coming back to future plans, what we're gonna do is very simple. We're gonna continue stick to the plan. I'm gonna ask you to, regardless of what I'm saying, I'm gonna try to avoid breaking my own rules during the session. And if I do, I won't tell. As simple as that. But you're gonna be aware of already. Let's imagine that we have an average of $1,000 is more or less what we got the feedback this morning because of what we saw today and where we end up. So our stop loss, and from until we get to the $2,000 again, guys, and write this down, or we can write it a little bit later, is the stop is going to be at 30% of the port. So in this case, it's going to be $300, assuming that we have $1,000 left. And we're going to continue with the profit taking of 25, 50, 75, moving the stops accordingly to break even at 25, to 25 at 50, and to 50 at 75. When we get to 25, we'll decide what we're going to do, if we're going to roll it or not. But we're not going to roll anything until we already have profits. In other words, that the cost of the roll is going to be no more than 30% of our total profits for that trade. So if we cannot afford with 30% of our profits a roll, we're going to sell it instead of rolling. I don't know if I'm clear for now with that. Any questions? And feel free to jump on mic if you like, guys, or whatever. I mean, you can, I'm watching the chat, but you can also jump on mic. This is nothing. This more like a workshop, is like an emergency, not an emergency, a clarification, a meeting, so we can. Coming back to the comments that I got, they are very proactive, and I don't take it wrong and anything, but CODT said, for example, you enter UPS from my perspective, blah, 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 which leaves me more wonder. And then it tells me, did you move your stops? What you did? I mean, do I have to repeat that? I always do the same. I set a risk amount for the trade that I take. I take profit at 25, 50, and I move my stops to entry. So that is already given. You already know if we are taking a trade that is out of the challenge, because we already accomplished the challenge, and I also call in place for the goal. And if you decide on your own to take it, it's the same accordingly to your size. You have to determine what is your maximum risk, and you're gonna decide if you're gonna take a full position or a starter. And accordingly to that, you're gonna follow the same rules. So nothing changes. Nothing changes. Everything is gonna continue doing the same thing. So we just follow the rules. Follow the rules. You use bracket orders. I don't know if somebody of you who are using TOS, I don't know if they already developed. I already put an example of how you could create this template for for putting your different, here, for example, taking 25, moving stops and everything. You can create template. Honestly, right now, I'm not using it because we're having very few plays and I'm just doing it, but at least have that set up. Okay, there is a question if I can go to a rolling play. To begin with, what a roll means is that the roll can be done in different ways. A roll, you use it is when you want to take some risk off and you want to continue the trade because you see continuation of it. The roll, what it is very simple. It's just selling your contract, and at the same time that you're selling that contract, you're buying another contract with a different strike price, usually further of the money of the one that you have. And you have the option to take the same expiration date or take other expiration in the future. Obviously, if you take a further expiration, the contracts are going to be more expensive, and most of the time it ends, if you don't have enough profit on that trade, you're going to be ending up paying for that roll. That's fine. It's not bad to do it, but usually if you have to pay for it, you have to have profit. You cannot pay it with the same. That's the idea. So when we're rolling here is, if we already got up to the 75%, and let's say that we started with $100 and we already have $75 of profit. If I want to continue the trade, I roll to a further strike. I just have to make sure that those $75 of profit, I take 30% of that. That is like $25. That means that I can only afford $35 of the next roll. So if I have 75 minus 35, that means that I'm going to receive $45 of credit, right? So instead of selling it and having $75, I'm only going to receive $45 instead of the 75 because the other 30 were invested in the roll. And that is when I say now you risk out, right? Because you're buying a roll, you're staying in a trade, and you're buying that roll with your profits and your initial investment, plus the other 70% of your profits are already cash. And that's when you roll. And you continue rolling every time that you get again to 75% of the roll, you do the same. Usually when you roll and you have and you pay for that roll with profits, most of credit, they don't put a stops because it's already paid off. So you can afford to go all the way to zero if you like, and you're just losing part of your profit, but you're not losing anything involved with your initial investment. So that is the reason. And I don't know if you have said you just do it until it doesn't work anymore, right? It works until it doesn't. How do you know that it doesn't work? Either because you wanted to get out that certain amount stop loss of your roll, or it's just the trend change and everything. Or if you took a further expiration, you want to take a swing and just wait and forget it. So that is the reason. A lot of the good profits are made because of the rolls. Those are the ones who really produce you the extra profit and the good returns for an initial investment, like we did the other day with Uber. So, but you have to know when to roll. So when we're gonna roll is when we have 75% of profit already, and the roll is gonna cost no more than 30% of our profit, total profit from that for that play. If I don't know if I explain myself, and if the one who had that question is not here, you can hear it in the recording. But for the ones who are, I don't know if there are other questions regarding the roles. Nope. Yes. Nope. Maybe. We're good. Okay. So as an example, I can give you what I'm more or less, I try to do a simple table here. And I always have problem finding where the recording is, so I can change window. Where is it? Where are you? Jesus Christ, where is this thing that shows you everything where you are? I cannot find it. Can you believe it? And if people don't know how to roll you advise to just close the position? Yes, definitely. Another thing that you can do when you get to 75%, you just leave your stop at 75, or you can put a limit, trail stop. That is the only occasion when I might use a trail stop, or you just manually increase your stop as soon as you get in more profit and profit until you get stopped. So that is the easiest way to do it. Here is this signature. So I'm gonna come back here to this Excel, and what I try to do here, guys, is, for example, of a starter. In the case that we had a starter, when we get to 25% profit, we can have a balance of 625. We're gonna sell 1/4, so we're gonna get cash out of $156.25, and then we're gonna continue having 468. We get to 50%. The balance at that point is gonna be 585.94. You sell half of that. You take cash 297. Your new balance is gonna be 292.97. It goes 25% more. You're gonna have $366. You cash out 183, and then you have a remaining of 183. It goes another 20% to the 100, or you can roll it here. At the end of the day, if we complete that cycle, you're gonna get $889 or $90 of total cash, minus your 500 initial investment. It's gonna give you around 80%. So you are like covering 80. If you leave this original play and you don't sell anything until you get to this point, you might get the 100%. Instead, you're only gonna get 78 because you're taking profit in the road, right? I did here another example. For example, if we have $1,000 left, we're gonna do the same, right? If for a full position, let's imagine that tomorrow we're gonna go full, we're gonna be taking the same. So more or less is what you have to do in order to see, but it's very important that you start moving. How many times you complete the cycle? 1 out of 10. So mostly 9, 8 out of 10, you're gonna get to the second, third phase at most. And when you get all the way down, that's good. But with if you see, we get to the practically up to the second phase, to the 50%, you already got $449 with the starter. So it's day done. It's all you need. I mean, 400 catch out, 444 to 19. Yeah, minus you have 449 plus 300. You have $700. You invest almost $800 out of 500 investment, you have $300 already. So that is the 30%. That's what I'm setting a goal of 30 or 20% of the account. So the goal is going to be today, I mean, and always the goal is going to be 20% of the balance, right? So unfortunately, tomorrow, theoretically, the goal for tomorrow, if we only have $1,000 left, is $200 for the day. If the trade goes well and we can fulfill the cycle, we can go up more. Not related with the challenge, sure. Let me change again. Sure. When it's extended, okay. When I mean extension is that when it's extended is when the underline is already in here, and I use extensions in extensions are in all of the time frames. But when I'm trading, I use it on the 10-minute and on the daily, right? So an extension is, for example, in this, and let's do it here we have this candle here, and this is the 4 EMA. This candle open at 288, closes at 284.26, and when the next candle opens at 284, is extended for the 4 EMA. So this is the open. This is the 4 EMA. So we have a gap here. And usually I use the wick, not the open. But if you see here, there's this wick is extended. We have a better example here. This is much better. This is an extension, guys. Closes here, open, and then we have this extension, which is this gap between the wick, the upper wick, or the lower wick, depending if you're on up or on a downtrend, and the 4 EMA. When you have an extension, usually on the 10-minute and in the dailies, in the hourly it happens as well, but it's very complicated to identify it. But in the 10 minutes, 90% of the time, when you have an extension, is gonna retrace to close it in order to continue. So we have an extension here. And then on the next candle, that extension was filled. We have an extension here. On the next candle, that extension was filled. We have another extension here. On the next candle, the extension was filled. And we can go over and over and over. Right? Extension, fill, extension, fill. So either the extension is going to be filled because the price is retracing, or the EMA is catching up the price, or both, right? So I don't know if in this case, we have this extension here. Today, it opened here. And it's still extended. Tomorrow it's going to open here, and I put here the square that is the extension that we're going to have to get filled tomorrow. So the problem with the daily is that in the 10 minutes, it happens in the next two or three candles. If it's a daily, it's going to happen in the next 1 or 3 days. This one is a 10-minute candle here. It says 10 minutes. This is a daily. This is the hourly. So I always use 10, hour, and daily are the 3 time frames that I use. And I use the 4, the 8, the 13, and the 20, and the 50 EMA. So that is an extension. That's what I mean when it's extended. Is that clear? Extension usually fill the gap. Yes. The only time that when you have news and a momentum, something that is moving very hard, the extension doesn't get filled, and it's very rare that it's when you have a very strong momentum and a strong movements. But usually 90% of the time, those extensions get filled. I think I need to do more YouTubing on it. Answer related, but what were you looking at in terms of indicators to decide whether to take Tesla? 50 MA. I was I mean, it says Tesla's working here. Yes, but it's not breaking the 50. It might work here if we take it here on the dip. Yes, but so yes, here is a good opportunity to take it and scalp it towards the 13, but it's risky and more in this time. So the only time that I was sure about Tesla or confident that it might work, it was when it broke the 50 and confirm about it. When I say confirmation, is that the candle closes above or below the EMA level. So here, or on the downside here, right? Here are the two entries, or for Tesla. And ironically, oh come on, if you see, I see an entry here, an opportunity for entry here, an opportunity to the downside, and an opportunity to enter here to the upside. And if you see the line that I was referring here on the indicator, here is one cross, here is one cross, here is another cross. See, there's one here, and there is another one here. And everything coincides with the cross on the 50. This one is confirmed that it's going to be strong because it stays below the 30 level. So when it stays below, I told you that it's going to have what? Continuation on the trend. When it's in between these two, it's going to be choppy. It was never choppy actually, because when we came here, we also had continuation here, and they came back. So that is what we have to follow. I have an indicator that I'm on a scanner that alerts me when an underline is crossing this 50 level, so we can get an entry and exit. So can you zoom in? It's hard to, like this. You're showing the BNTX chart, not Tesla. Holy shit. Cheers. Okay, sorry guys. Again, coming back to Tesla. Now you can see Tesla. I was talking and working on this step. So this is the 50 MA for the downside that I was saying. That is an entry point to the down. Here's the cross. And this is the other one that I was waiting to get up. It crosses and confirms the 50. And here's the line when the indicator crosses. And I was explaining that when this indicator is below the green light, the green line is gonna have continuation of a downtrend. When it's between these two, it's gonna be choppy. And when it's above the red line, it's gonna have continuation of the uptrend. So for me, there were only two entries. And actually you also have these flag breaks here, or trend breaks. that tell you where to enter, right? On the down, on the downside, sorry, on the downside, you have this break on the flag here. So you have the first confirmation here that is going downtrend, changes trend when it crosses the 13 EMA, entry point on the 50. Why the 50 right now? Because it's very volatile, right? So I wait until the 50 and I have the cross here. I have my indicator telling me entry sign. Look for my levels. I have this trend here. So that's actually is when it stop. It's another opportunity to entry here. Look for your levels, and that's it. It didn't have, so that's what I saw. Work. Now it's clear. So these are the entry points or exits. So this is the indicator that I was telling you, and you have it on the template. Well, you didn't jump in on my guys when I was talking. Sorry, I mean I chose the different. I have so many monitors that I thought that I chose the Tesla. And for example, a AFRM today have the same. You're gonna say, Alfonso, you didn't follow your indicators and everything. Yes, correct. I mean, so we have a cross here. We're not gonna take. See, we shouldn't even take an AFRM according to this. It never broke on the upside. Actually, we had a sign here to get in here. Where is it? Oh, not here. We'll have a sign here. Another here. Are we on the 10 minute? Yes. But on the other hand, I wouldn't use much here in this case the 50 MA because it's not as range bound as Tesla, right? So what I usually use is crosses on the 4 and 8. But more or less is what other we saw UPST today. We took it here. When was it? When it was in the 319s. Hold on, let me just check. We took it around this area. Here, we took it here more or less, but didn't, I mean, it popped a little bit. And so what are the entries of this indicator tell us? We have here one. This is to the downside, but it didn't have too much momentum. This is another one. Actually, the only one that none of them work, but you have the trend line here, right? So I took it here when it broke this downtrend. So that's one my entry point, and crosses the 50, crosses all, cross the downtrend. Okay, get in. Unfortunately, didn't have continuation, right? So we got stopped. PC, it broke the what PC? Can you explain why some wicks are larger than others? Because the wicks are just where the price went. This is the range for the candle. It opened here, closed here, but it went all the way down. So The wicks are bigger because the underlying close closer to the open. That is not the only reason why. So also you didn't see the extension when I was explaining the extension? Okay, well, no matter. Here, for example, this open here and it's extended, right? This one open, close here. This candle open here. When it opened, open here. So it had all this extension to cover, which it did. Open here, extension failed. Another one here, open here, extension failed. Another one, this one, open here, extension failed. Those are the ones that I see. On the upside, this one, open here, open extended, and close down here. So the extension was failed. Always against the 4 EMA, yes. That is the ones that have, I mean, obviously are extended to the 8, the 13, but 80, 90% of the time, they fill the 4, not the 8. The 8 and the 13, and then obviously the 15, they don't get filled as consistent as the 4 EMA. But it's always the 4. So that is clear where an extension is. Anything else, guys? Everything related with the risk reward that we're going to be taking. Are we all good? So write this down. Stops are going to be 30% of the balance, total balance. The CR, okay, we can go to CRM. We can go to CRM. And now we're gonna go to the daily. This was the day, right? I got it around here because I know that when it opened the next day, even though if it's gonna be extended. So it open here and fill the extension. So open here. And the extension was filled the next day. More than that, right? All the way here. But here's when they filled the extension. It's the same that we played today with BNTX. It was extended. It opened here. I was hoping just to get all the way up here. And we didn't. We stayed there. So tomorrow it's gonna open around here. And it's gonna have to fill the extension. So it takes 1 to 3 candles. Unfortunately for BNTX, it's gonna take 1 to 2 days. That is the reason why it couldn't be done today. Extensions are very good for scalping. So intraday, you can scalp anything you want. And we can use BNTX as an example. If you're scalping, but if you have to be quick, right? Here, extension, fill, here, fill, here, fill. The problem is when you have, here is another one. Obviously, when you try to do it, not in every, when you have big gaps, right? Like for example, here is very obvious that it's extended. When it's very close, you don't have it open here, you can scalp it very quick toward the 4. 10 minutes we use 4, 8, 13, and 50. On the hourly, the same, but I don't use the 8, is the only, and on the daily, we use the same as the 10 minute. The green, the yellow is the 4 always. The red is the 8, the white is the 13, and the blue is the 50. Always on the same colors. Anything else? Take advantage of this session, guys. I think it can be with the, if you, I don't know if Cube, you have anything that you want to add? I mean, you had very good comments today, and I don't know if you want to contribute a little bit.
Yeah, I asked you a question on the chat. I think you missed it, but is there a certain win rate that you have on extension plays compared to the indicator on the 10-minute 50 EMA line? I don't know if, like, do you feel more comfortable taking extension plays or the crosses on the indicator?
I mean, let me go to the question. Who were, do you have a higher, okay, do you have a,
It was my question.
do you have a higher win rate on extensions plays or using the 10-minute 50 EMA indicator? Yes. High winning. I mean, what can you, I mean, elaborate? I didn't really quite.
Yeah, like comparing the extension plays to the cross on the indicator for the 50 EMA that you have on the 10-minute that you were showing us in Tesla. Well, those two plays are different, and I was wondering which one do you feel has
I mean,
more probability to
extensions,
success?
I use it for scalping on the 10 minutes mainly, and also for entries, right? When we are already on a trade or we're about to get, then we already know that has a trend. If you see an extension, at least you can wait to get a better feel when the extension gets filled, right?
Yes.
And the 50, when the prices crosses the 50 on the 10 minutes, those are the plays that have the best odds. They were much better. A cross on 50 on the daily is it's a very good edge play.
Yeah, I was just wondering to be ready for tomorrow's play, what would be the best trade to take if it was the waiting for a cross on the indicator or when we see a gap on an extension. I'll be pretty active to.
No, that definitely. I mean, the extension to begin with, if it's an extension on the daily, it doesn't tell you my entry. It just tells me that we have on that specific stock, we have a good opportunity to play the fill, right? That is on the daily. When you get in, you go to the 10 minutes and you wait for a crossing for the indicator.
Okay,
so you identify on the daily the gap. Once you identify on the daily, now you go to the 10 minute and look for the best entry on the 10 minute, looking for your target to be gap fill.
All right.
So the 1 minute, the daily tells you and helps you identify, for example, and also helps you if you want to swing it, right? And you see that tomorrow is going to be extended, it's going probably is not wise to swing it because it's going to retrace at the open. Okay. So even though it's going to have continuation, it's going to be against you at the beginning. because it's extended. So the most probable thing to happen is to start feeling the extension first between after continue going to the trend.
Okay.
So also looking at the daily is also a good way to see if it worth it to because and if it's a very good play and it's extended, what you can just do is sell and take it the next day and continue with that same underline, right?
Another question will be to be ready for tomorrow's play. Like, I feel like one of the main things about today's BNTX was going the full 9. Well, I took 9 contracts, I believe, the rest 10. That's what I could feel. And the so do we work on scaling in, or do we go all in?
To be honest, I'm thinking, I'm not sure that we're gonna go full tomorrow, but I'm thinking that tomorrow will be a good opportunity to go full because it's not gonna be choppy as today. Today was probably the most appropriate day to be doing only starters because since it's very choppy, you don't wanna risk too much, right? So one of the mistakes made, and that is on me, is we actually didn't go full, right? We went 3/4 of our balance. No, not even, yeah, not even 3/4. It was like $800, right? So it was like more than half, more than the starter that is 1/4 of the 2000. So I went almost half position, and that hurt. I mean, it was half position out of the 2K because most of us were in that level at the beginning of the morning, right?
Yeah.
So, and that is the reason that I was very, and that is the reason what I've been doing starters instead to going for full position immediately, right?
Yeah. I mean, in hindsight, it's 2020. Like, I guess if it would have worked out, we always wish to go in all in from the beginning to get a cheaper price on everything.
Yes, I mean the mistake it was it's very simple, Cuban. I have to take that. I mean the mistake was taking the trade in the first 2 candles at the open. I should have waited to see how I thought that the market wouldn't be more aggressive today, and no, it was choppier than expected. So it happened. I mean, it happened. It was a combination of many things. It was a bad allocation, bad timing of entry. So a lot of things got at the same time, and we didn't respect the stop losses. So we did 3 terrible things today. So it's very simple. So all this helps to understand, learn, and in order to avoid as feedback, we can see, okay, we have to be more disciplined in waiting for the first 2 candles to settle and the market to settle. We have to be very careful to take a better entry in terms of the indicator and the crossings. And we have to be careful right now with allocation, right? And right now, I'm a little bit, I mean, I don't have a problem going tomorrow full size for the remaining, but we have to be very, very, very strict in respecting the stop, right? And
Yes.
and aware that if we get stopped, that's it. That's it for the day. We have to wait until the next day because we're not gonna have any available buying power.
Yes.
So what I'm gonna do is I'm gonna probably wait I'm not gonna take it in the beginning. I'm gonna wait at least 30 minutes, 1 hour to start seeing the pattern of the different options that we have and look for breaks, right? On the indicator. We're gonna focus in 3, 4 that we see in the beginning that have good volume. And the very first one that triggers our multiple indicators and and looks interesting, we just jump in.
All right.
And we're gonna be just hunting those 3, 4. So that is what also very important, and I don't mind that, but that is what is very important, guys, that if we already have something on the radar, that we don't get distracted. Oh, Roblox is pumping, Apple is, yes, I mean, there are 6,000 underlines, and a lot of them are gonna be crazy, but we chose these 3, 4, 6. We have to focus on them in order to hunt them on the right place, because we cannot be all over. So that is the reason of having a watch list and having a plan already developed on that watch list, because in those, at least I already know my levels. I don't know what I'm planning to do with it. If I just take it spontaneously, something that is popping, and yeah, when we can take it for a scalp, something that is, but if it's for the challenge, if we already have a plan and we have to do it more methodically, we have to stick on to our watch list and just wait until that watch list trigger a good opportunity. And if it doesn't trigger, then down we start looking for something. But we have to be very disciplined in that regards. Let's have 4, 6, and let's just be watching those until we get the opportunity in those 4, 6. Usually you have 4, 6. Well, at least one is going to have a good opportunity to entry. But if we get all over the place and in the market chat, they are playing one thing and then you hear another, I mean, it's, at the end of the day, what we're looking for is to make $300 period or two, no matter with what. And you can accomplish that with any underline, just getting a good entry. So that is the reason that we have to concentrate on that. And then when they done with the challenge, we just can look for other entries separately from it for those who can afford it, and that's it.
Okay. I got a separate question, and it's probably unrelated. Because I was analyzing the video that you showed us on the VIX futures gap between this forward one contract and the next one contract. Mm-hmm. And I was wondering, because I'm not familiar with this, like we're looking for a time where the volatility either matches the October to the November contracts or surpasses.
Yes. So when it gets the same, the line flattens, and then we can start seeing backwardation.
And is there, I mean, I don't, since I'm not familiar with it, does the move
when that happens, when you start having backwardation, you're on the climax of the movement.
Okay.
So if we have what the video explains you is, I don't know how are we doing. I haven't checked them today, but if we have high volatility right now and we move decently yesterday and we didn't inverse, so this is not over, right?
Because we haven't inversed.
We haven't been inversed, so this has a lot of continuation. So now the volatility is high. We still have a skew there. So the best is still to come.
Okay. So we might, there's still a possibility we might see more downside. Or
and that is the question is, yes, that is a possibility, but we have a lot of possibility to have more volatility. That doesn't mean that we're going to go down. We might be going down and up, but the ranges are going to be wider. That's what it says.
Okay.
If you look the other indicators and everything, what is happening with the dollar and with the sectors that were up today, that were all defensive sectors, now you have some arguments to say that everything is leaning to the bearish side, right?
Yes.
But it doesn't mean that it's going to happen that way. It can be, what it tells you that the range is going to be wider, that you're going to have 80 points up or down or both, right?
Yes.
And then you look for the another good way to do it is go to the SPX and see what is the expected move.
But we're still outside the expected move for the week, so
Yeah, we're outside, and that is the thing. I mean, when we're in the expected move, in that line, everything is happy. But if we start moving downwards from the expected move, is when the firms have to start hedging, because they're gonna be not delta neutral anymore. So if we're on the line of the expected move, that's fine. But if we start having moves on the downside, is when the hedging with the S&P futures, the firm starts to sell S&P futures to hedge, because they need negative delta because they are positive delta, right?
Mhm.
Why? Because people are buying puts, and if people are buying puts, they have to sell those puts, so they have positive delta. And to be delta neutral, they have to sell futures to get even, and that creates the snowball to the downside.
Okay.
So what we have to see very carefully is that we start to part away from the expected move on the downside, which is the expected move of the downside was this is the level. If you see, this is the level. When we started to move here away from it is when we drop, right? Usually when we drop from the expected move, it tends to go back again towards it. So tomorrow we have to be careful if it start to come back here, around here, it's going to start triggering those hedgings, and it's when you have acceleration to the downside.
Okay.
And right now, beside the expected move that is here, if you go to the S&P SPX option chain and you look for October 1st, you have an expected move of 57 minus positive 58 points. So this thing that from here till Friday, we have expected move of 58 up or 58 down, right? So
Yes.
if we are in 43.59, we have all the way to 43 here. Actually, when we were here, see the 4,300. So 4,300, expect some if we go to the downside, expect some resistance on 4,300. If we break 4,300, and what is the expected move, guys? The expected move is one standard deviation. So it says that 68% of the occasions, the price is going to be within that expected move. When we get out of one standard deviation, we can go to 2 sigmas, 3 sigmas. So it can go, instead of 58, it's double or triple that. So that is where we have to be very careful here in this level, 4,300. If we break down, this could be to the other 2 sigma, which is 80 points more, right? Which was the expected move for all the week. So instead of being 70, it will be 140. So that is another way to find the next support level.
Okay. Very informative. And I got another question. I started the day with a bearish sentiment since I saw that video, and I know increased volatility doesn't mean that we're coming down, but it's often related to, I guess, as it's expected to be larger moves, and if it's to the downside is quicker than the upside. So so I just have a bearish bias, but I'm playing the challenges as anyway as they come. And do you consider having a bias towards the start of the day, or building it towards your positioning? Or
yes, and your question is more related, if we had a bear sentiment, why we didn't go with puts instead of calls, right?
well,
more or less.
Not exactly with the stocks that we were playing, because we were playing different things. The BNTX, the the extension and whatnot. But if we were bearish sentiment, well, why we didn't look for a bearish setup somewhere else, or yeah, basically, yeah.
Yeah, no, that is correct. No, totally agree. But yes, I consider, not today, but I consider, I mean, and the reason that I didn't consider is that I said it in the morning, that even though the sentiment was bearish, I knew that we're gonna have an inside day. I knew that it was gonna be choppy. So that really doesn't matter of which way you take, because it's gonna be sideways, right?
Yeah.
And that it was the main reason of why if I knew that we were gonna have continuation on the downside, I mean, I love to play puts. I'd rather play puts. Why? Because if the advantage with the puts right now is that if the things go your way, you're gonna get to your targets quicker, because you're gonna have the price plus the volatility with you. If you have calls and the things start going your way, you're gonna have against you the Vega, because the Vega is reducing the premiums. So you need a bigger move on the upside to get this. You need like half of move to the downside, comparing to the calls, because of the Vega, when the volatility is high like today. Because yes, it's high, the volatility, but if we go upwards, we're gonna move a lot upwards, but also the volatility is gonna dry, and you don't have the same amount of percentage.
So it would have been better to get on puts in case. Well, I don't know. This is all hindsight 2020. So, but if we have a high bit, if the VIX is high, above 20 or so, and there's a possibility that if we start going up, the VIX is going to start dropping, and it's going to hurt the premiums.
But if you get puts and if goes up, you get decimated in seconds.
Yeah,
that is the problem. It goes the other way. If it doesn't go your way, you're gonna get stopped. You're gonna stop. You're gonna get stopped twice as fast.
Okay.
So that is the other part. So the best
Yeah.
scenario is puts and going your way. It's better than calls going your way on high volatility.
Okay. Yes.
And that is the reason what I like bearish days, because when things go your way, your profits get exponential, because you have the price drop plus the volatility contributing to you. And that is what you see 50s, 100% very quick.
Understood. And so I think that's about it. I got no more questions for now. I'll get them later.
Anyway, okay. Anybody else, guys? So I think if everything is more or less clear, you already know the rules for tomorrow. Don't get discouraged. We just have to be very prudent right now. With the $1,000 left or 800, whatever we have, we need to look for 20% of that, and hopefully we get more. And just follow your stops.
I believe in you.
Yeah, I believe in me as well. So we are two of us. At least. We're gonna be fine, guys. Anyway, I found appropriate to this improvised workshop, because I knew that a lot of people were a little bit concerned, discouraged. I don't know, don't give up. I mean, we just have, I mean, that is the most difficult part, guys, is just stick to the rules. Even for me, for everybody. I mean, the theory, we have the right theory, we have the right experience, we have people that know how to trade here, but we just have to execute accordingly. That is the difference between success and failure. So don't get anxious, don't get your emotions involved in you. Be aware that if we only have 1,000 with $300, $200 tomorrow, That's all. We cannot get to 80,000 tomorrow because we only have 1,000. So it has to be step by step. I can restart the challenge any day, guys. Yeah, for me, it will be even easier. But I'd rather restart it if we go to 0 instead of right now. I think it's not fair for anybody. I think that it's gonna take us a little bit more time. I don't know, probably take us less. I mean, all depends. It's just one more good day that we're looking for, and we'll get back on track. So, because if we restart the challenge, that means that come back to 2,000, and we can come back to 2,000 tomorrow with a good trade. So let's just wait. But of course, if we get to 0, don't be sure that I'm gonna have another at least two shots to this challenge. I'm not gonna give up on the first try. So for those who are interested, we're gonna continue. We're gonna get them. We're gonna get the challenge. You were saying, Cube, sorry.
One last question. Are we gonna still have the rule to 1 to 2 positions max? I think it was like that, or 1 position max or something like that.
It's not exactly a rule, but more than ever, yes, I think that we cannot take more than 2 because of the remaining balance. But actually, I only would like to take 1. I mean, it's quicker just to go full size, and that's it. But I know that I broke that one as well today. But yes, I'm gonna stick with only 1 position at the time. Is what you meant? Yes, that is another thing that I'm gonna come back with that. I'm not gonna be tempted to take another one at the same time. Only 1 until we close it.
All right.
So we're all on the same page.
I'll be the reminder.
Yes. No. And guys, I'm the worst to follow rules, guys. So you help me out. I mean, I'm a rebel in that regards. I don't like rules.
I think feet feels the same.
That's why we trade.
Mm-hmm. Yes, I mean and I'm not ashamed to accept it. I mean, I'm human as well as you, and I do mistakes. But fortunately, lately, when my good things are better than my mistakes, so hopefully you haven't seen any spark yet of, unfortunately. I don't know, because of the challenge. I mean, I don't know, but to be honest, the challenge is 2 things. It's not only, of course, getting the challenge done is very important, but also the journey to get them, all this information that we're gathering, these workshops that we're doing, reviewing what we did wrong. And the important thing is that you have to help me out, not to contradict myself, that if we already knew what we did wrong today, let's make sure that it won't happen, right? But I also, at the same time, I also ask you to be focused on our watch list, that do not be anxious, that try, if you already understand the rules, don't be asking if we're still in the trade or not, because you already know when to get in, when to get out. So one thing is that you might ask because you're not on the stream, and probably you got that's fine. But if you are on the stream, I mean, you have to learn here how to do it. Even though I'm gonna call the place, it has to have also some effort from your part, right?
Yes, sir.
And that's the only thing that I ask. But definitely, I mean, I think that all that we have learned on these days, it's helpful for everybody, so they can start. And we're gonna continue doing these sessions at least once a week regarding the challenge. So for questions or everything that you might have, we can just go over, right? And that's it, guys. It's already gonna be 10 o'clock here, so and for you even more late. for those of you in the East Coast. So see you tomorrow, and don't get discouraged. I mean, we're gonna get it.
Yeah.
Macallan 12. Yes, let's do it. Let's do it. You too.
Make sure. I'm sorry. Make sure to check out Circle, guys. There's stuff.
Yes, guys.
posted.
Sign to Circle is there's a lot of stuff that is start. I mean, it's like everything. We are starting building content there, and the more that you interact with it, the better. And the good thing is that it doesn't have all the garbage that other channels have with these are topics related with trading. So if you want to chat and discuss if you're happy or not, you go to the market chat. But here in Circle, you have very valuable content there. What Circle? A link is going to be posted on the Circle is like a Facebook platform for work, you can say. So everything that the plays, the summaries, scripts, watch lists, ideas, due diligence. We have a Circle account for the Alfonso VIP room. So you can go there and just explore it, and you can interact, ask questions and everything.
So far, me and TMH have been posting setups. If you guys want to check it out.
Yeah,
Cool.
Cube and there are very nice setups there and ideas. I'm gonna start to be more active. We just started this week, guys, so it's brand new. So there's a lot of things to come, and there are another other features that we're gonna be incorporating there, and that's a way for you to have everything in one site. So if you have questions of eventually we're gonna be posting the trades there live, so you can see it's gonna be only a channel for the challenge, so you can go immediately there and see what are the current status of the plays that we're taking and what we did and everything. So it's pretty cool. So I don't know if I'm missing another question, Q, because I haven't.
No, I'm good.
No, but on the chat, no, there's nothing else, right? Nope, that's all. Okay, guys, so see you tomorrow.
You guys tomorrow.
Adios.
Thank you, Fonzo.
You're welcome.